Hey, check out this chart, right? It's SuRo Capital. They've climbed from $3.50 about a year and a half ago to 13, almost 13 bucks. That's what you call more recently even going parabolic. Now the company, well, they provide access to high growth venture backed by private companies. We're talking about the stuff that everybody wants, right? In other words, Main Street, you get a chance to have exposure to the hottest names before they go public. So let's bring in now SuRo Capital, their CEO, Mark Klein. Mark, first and foremost, congratulations.
Thank you, and thank you for having me on.
The surge in the stock, why do you think? We were just talking, and a lot of companies have come up recently in the last year or so saying, hey, we can get you access to these hot IPOs. Hey, we could do it. And it feels like everyone's saying we could do it. You guys have been doing this for over a decade, and the stock is just now really taking off. What's going on?
Well, we're very fortunate. We did start in 2011, and at that point in time, we felt companies would stay private longer. And we were in Facebook when it was Facebook, and Twitter when it was Twitter, and Palantir, and Dropbox, and the list is long. We've had during the last decade or so, several opportunities when the markets were really favorable and we've had runs in our stocks, and other times when the market's a little slower. In this recent run, we've had a lot of our companies have done exceptionally well. We just pre-announced our NAV, which was up 70% since the end of last year for the first quarter of this year. So that is starting to be reflected in our
net asset value, and I'm glad you brought that up because this Rise Innovation Fund, it went public. It went parabolic. We're going to bring a chart up. It went straight to the moon. 350. It came down quickly. Now it's about 100. And the big question was you had the net asset value and the market value. They were completely out of whack. And I guess that's something people have to guard against.
Well, they have a very exciting portfolio.
Right.
Robinhood came out. They have a very exciting portfolio also. And these stocks traded high, quite high. We have an outstanding portfolio. We're covered by a lot of research analysts. And our net asset value that we put out the other day is $14 to $14.50. Our stock is trading below net asset value as opposed to these that are trading at anywhere from a couple of times net asset value to 10, 20 times net.
Well, you've got an impressive roster of names, and I mean, we had a table with all of them because I think it was almost like 30 some odd names. Right. It's the decision-making process. How do you go about deciding which of these you want to participate in?
When we buy them, it's basic investment thesis. We both top down and bottom up. We look at where we are, where the tailwinds are, the sectors, and then we go to a company. In the case of OpenAI and CoreWeave, we were early to the AI infrastructure story. We thought that the desire for compute far outstripped the supply of compute. We were in CoreWeave before anyone understood what CoreWeave was.
Let me ask you about that because you're still holding CoreWeave even though they've gone public already.
Right. We sold over 2/3 of our position. Okay. We sold it all the way up. We hold a bit right now. I personally think CoreWeave is one of the most misunderstood public companies that there is. You have a company that's revenues are doubling, their RPOs are up 300%, and their cap structure is what folks have a tough time.
Listen, I think the CEO is going to have to articulate the message. Maybe he can hire you because every time he opens his mouth, the stock goes down. We've got a minute to go.
Okay.
Let's talk about potentially hot IPOs because I hate when these IPOs, 2020, 2021, I say was the greatest ripoff, one of the biggest ripoffs of the American public in history.
Right.
In history. These companies went public at too high valuations, and almost every one of them have come crashing down. Last year, almost all of those hot IPOs have come crashing down. But we know some of these you want to buy in as when they go public. You want to ride them. And these are some that in your portfolio you think are going to be pretty good as new.
So I'll be pretty quick. Canva is probably a company a lot of people know. There's 265 million monthly active users, $4 billion in revenue, last valued at $42 billion. It's going to be a successful IPO probably sometime early next year. Whoop just raised money a month ago at a $10 billion valuation. They have 2.5 million users, over $1 billion in revenue, growing at 100% annually. OpenAI is a story that's talked about regularly. They just raised $122 billion.
Yeah.
I mean, it's a fabulous number. That they will probably go public in the next.
I got to let you go, but SpaceX, maybe at a true $2 trillion valuation.
It's fantastic. $400 million valuation.
But would you buy it when it goes public? You wouldn't chase the stock, would you?
We don't own it. We haven't owned it,
right.
And I'm sure the bankers are going to do a great job, and I'm sure it'll be a terrific IPO.
All right. Very diplomatic. I appreciate you. And by the way, congratulations.
Thank you very much.
Good stuff.